Hello. Thank you for joining us for the year 2019 financial update. Sabancı has grown over the past 90 years to become one of Turkey's leading strategic investors. We have done this through continuous evolution of our portfolio, leveraging heritage along with developing partnerships with global leaders in their fields such as Bridgestone, E.ON, and Aviva. During this time, we have created market leaders in large and growing business areas and gained in-depth expertise across industries. This is reflected in our strong financial track record of real growth and returns, and in our robust balance sheet and cash generation. Our track record has given us the strategic flexibility to allocate capital to generate more value for our stakeholders, whilst also being able to pay a dividend. Last year has been in a transformation phase for the new generation Sabancı, and now we are on execution. In that context, portfolio simplification, capital recycling, and acquisitions accelerated in 2019. According to our midterm strategic plan, and in the light of the global trends, we set our roadmap for the next 5 years under 2 drivers. Number 1, to focus on growing the core while exploring opportunities in adjacencies and digital. Number 2, to create value add through effective ecosystem management to enhance additional value from underlying assets. On designing the future, as we are building the new generation Sabancı, we have 3 pillars for holding value add. 1, performance culture. 2, dynamic portfolio management. 3, value creation through Sabancı ecosystem. In the foundation of our strategy lies the enablers that supports our pillars: digital and data analytics, talent and culture, ESG, governance, social responsibility, and environment. Within this strategy, our midterm capital allocation will be as follows. Number 1, to grow our core strategic businesses, as we will continue to focus on energy and utilities, industrials, and mainly insurance in financial services. Number 2, to explore adjacencies in above sectors like we did in composite business. Number 3, to have new opportunities in digital front. 2019 was a remarkable year for the group with profitable growth and exceptional cash flow generation. We managed to undertake the targeted acquisitions and successfully integrated them within the group structure. Our group CFO, Barış, will be talking about financials more in detail.
"2019 was a year of growth, execution of strategic moves, record cash flow generation, and solid operating profits. Besides investing in sustainable, renewable energy, our focus on digitization, technology, and data progressed well. Our energy business line once again created the greatest positive delta in our group. We continued with our investments in distribution while benefiting from a balanced and efficient generation portfolio. In our industrial businesses, we focused on composites expansion and completed our 4th acquisition with Axion Materials. In our cement business, we have achieved record shipments to international markets. Our retail business, we focused on omni-channel strategies, CRM activities, digitization, and data analytics. Financially, in line with our year-end guidance, our non-bank combined sales and EBITDA grew by 15%. Record cash flow generation continued to facilitate the deleveraging trend on the non-bank side. Adjusted for IFRS impact, our net debt to EBITDA level declined to 2.2 times by the end of 2019, despite the capital increase in our bank. Our operating cash flow has increased 73% year over year, driving our leverage and creating a sustainable base for growth and dividends. Free cash flow registered an impressive 76% growth, reaching 6.1 billion euro. Energy segment continues to be the main driver of this robust cash generation, followed by industrials through effective capital management. Sabancı Holding's standalone net cash remains at 1.7 billion lira, which is mainly in hard currencies. Our total non-bank combined cash, excluding insurance and tobacco, stands at 6.2 billion lira, while the float at insurance companies total 4.3 billion lira, a total over 10 billion liras. As mentioned, we concluded the year-end in line with our guidance, 15% growth in top line and EBITDA. On a comparable basis, our non-bank top line growth was 20%, which was well above the inflation. Comparable non-bank EBITDA was up by 28%, exceeded total combined EBITDA growth. Comparable non-bank bottom line growth reached 26% despite the challenging macro environment. Non-bank ROE has been continuously improving. As you would recall, in 2018, it was a year of substantial hike in ROE. We have been able to sustain a double-digit consolidated ROE in 2019 in a very challenging market backdrop. And as the capital allocated to energy segment became net income accretive, our non-bank consolidated ROE had caught up with the bank ROE for the first time in 2018, and in 2019 it passed it. Resilience of high ROE came in a year where the cost of capital has dropped significantly. Comparable revenue growth reached 20% on a solid performance of energy, insurance, industrials, and retail segments. In energy, revenue growth was driven by solid growth via grids and strong momentum in all our generation assets, especially renewables. The retail revenue growth was driven by strong like-for-like due to improvement in customer traffic and overall basket size. Insurance segment's strong top-line growth was driven by contribution from new life protection products coupled with prices and volume increase on the non-life side. New acquisitions in composite business and increase in tire exports led to 25% growth in the industrials. Comparable EBITDA growth reached 28%, driven by energy, insurance, industrials, and retail. Energy's operating performance, accounting for 66% of our total non-bank EBITDA, was strong, and financial income in distribution segment, an exceptionally strong performance in all our generating assets, especially hydro, owing to a wet year and the dollarized feed-in tariff. Retail segment's operating performance continued to improve with the initiatives taken in customer traffic and basket size growth, driving the strong EBITDA. Combined ratio and low claims frequency at the non-life business and insurance supported the EBITDA growth. For the industrials, increase in export share in tires, acquisition of Axiom materials, and effectively managed operating expenses drove segment's EBITDA growth. Cement was the most challenged business in 2019, where the lack of demand was compensated with international demand and solid performance of our white cement business. Non-bank comparable bottom line was up by 26%, driven by energy, insurance, and industrial segments. Energy segment, which made 64% of our non-bank consolidated net income, surged sharply on solid pass-through of strong operating profitability at both generation and distribution. Retail is still loss-making, but improved operational profitability. Insurance segment's net income was strong, which has been supported by higher technical profitability and strong financial income on increased load. Industrial's bottom line improvement was driven by a positive pass-through impact of EBITDA in reinforcement and higher income of tires on the strong export markets. I want to highlight once again that excluding the bank and tobacco, we generated 6 billion lira of free cash flow. Excluding the bank and tobacco, we have 10 billion lira plus of cash and float in our hands. Overall, 2019 was a year of profitable growth, exceptional cash flow generation, and targeted acquisitions. We will provide you longer-term view and guidance starting from the next couple of months to give you a better feel of the strategic profile and opportunities in the market. We will continue to focus on profitable growth, cash generation in our operations, as well as upstreaming to the parent via dividends. Therefore, maintaining the quality of earnings and to fund our long-term growth and dividends remain key. On the strategic front, our focus will be exploring adjacent higher technology businesses via agile teams and executing our growth and return promises with a faster pace.